Hello everyone, this video is for the private channel. In Kyiv, it's 10:26 April 29th. Bitcoin is trading at $77,050. I didn't specifically prepare. Well, let's take a look. Yesterday was a very good situation for buying. Unfortunately, I missed the moment. I thought we'd drop lower right here to around 75,000 where it's highlighted by the red arrow. The downside target on the daily candles, which will very likely hit, has now become a difficult. So, the question is, will it be today or will it be tomorrow? Meaning, do we go down now or will it be after we first go up to around $84,000 or even $87,000? Before we start analyzing and trying to find the answer to this question, let's look at the stock market. Here we have the E-mini futures. What do we see here? First, we see on the daily candles, as I move the cursor, a huge number of short signals. Well, I can't say huge, but there are many of them. Our overbought oversold indicator is pointing down from a strongly overbought position. And this suggests that the probability of a decline is very high. Besides everything else, I'll remind you once more that we had a picture like this. Yes, where we were moving within this huge expanding wedge. And the chances that the stock market will shoot up from its all-time highs somewhere upwards, in my view, given this overbought state right here, are much lower than the chances of it going down. Note that there's already strong overbought pressure on the weekly candles as well. From which I conclude, but let's look at this conclusion from a bit closer up. Just a second. Look, I conclude that due to yesterday's engulfing on the daily candles, we have a chance for a downward move in the stock market. We have downside targets, look here, on the 12-hour chart. We have, in general, even a divergence on the overbought, oversold indicator. Because, look, prices are rising here, while the indicator is falling in the same area. So we have a full-blown divergence on the RSI as well. And this indicates that the stock market is very likely to go down. Well, at least down here to the pink zone to hit the downside targets. That's around 6,940 points, maybe 6,800. But I think the movement will be much deeper. Maybe not right away, maybe over a few days or even weeks. Somewhere down to the bottom of this wedge, breaking through its lower boundary. So, the stock market right here and now is signaling very high risks of a decline. And this raises the question, will Bitcoin even reach the 87,000 mark, and where did that number come from? Let me remind you where that target came from. Let's open the weekly candles. We have this candle right here, the big red one. I can draw more here without worrying about messing anything up. Let's make this level, well, black so it stands out and dashed. Let's go with bold and dashed. Look, last week we engulfed the downward candle from February 2nd. This means our next growth target is the base of the previous red week, right here, 86,670. So, from the perspective of the weekly candles, everything looks fine. It looks like we'll likely enter this overbought zone and end up somewhere around here. I can only assume the stock market will hover at the top for a while without dropping, allowing Bitcoin to climb a bit higher. Maybe they'll give people hope that this is it and we're heading for new all-time highs. And then, naturally back down. How far? To retest $60,000, maybe 57, 58, 59, or even below 40. So, the weekly candles point quite clearly toward continued growth. Toward the 100-week moving average, that's around $86,500 to $87,500. Alright, we're done with the weekly candles. Now let's take a look at the daily candles. I'll expand them to full screen. What do we see on the daily candles? On the daily candles, we see that bearish engulfing pattern we had, right? We see a move toward this blue curve. We haven't touched it yet, which means there's a chance this decline will continue. And even drop down to this green level at $73,000. So for now, the situation on the daily candles remains uncertain. The momentum of the overbought oversold indicator is pointing downward, suggesting that the primary direction remains right here, toward the yellow target zone, around $75,000 to $73,000. So, on the daily candles, the outlook isn't bullish at all, right here and now in this moment. Now let's look at other time frames. On the 12-hour chart, look, there are many downside targets, but we're also seeing strong oversold conditions. And there was significant oversold momentum on the 4-hour chart, synchronized with the 12-hour. And this, let's say, makes a drop somewhat difficult, from which we can still assume that Bitcoin will, for now, at least on the 4-hour chart, offload upwards. That is, it will head somewhere towards the overbought zone. And according to the daily candle layout, it could be that same level of 79,960. This was our green target right here. Maybe the 200-day moving average, right? Well, still those same 84,000. Right. And then it will go to test 75. And likely lower. So if we base this on a comprehensive analysis, right? Then if we head down now to the 75,000 area, unless it's a quick, sharp spike, then we won't have any time left from the stock market's perspective to grow, because the stock market already needs to drop. And so, well, probably a slightly more likely scenario is that this oversold condition on the 12-hour and 4-hour charts could be realized as a rally toward the $80,000 mark, and even somewhere around 84,000. And we'll watch the situation from there. But what to do now? Unfortunately, I missed the long entry point yesterday, although it could have been taken with low leverage, basically, amid the aligned oversold state on the 4-hour, 12-hour, and 1-hour charts. It was right here. See, in this section, you could have bought, safely without a stop. Well, safely enough, I emphasize, with low leverage. But now the hourly candles are looking down. They're overbought. The 4-hour ones are looking up, and there's even some growth target of 77,300. Yes, we were already there, but this target suggests we'll likely return and maybe even go higher. The 12-hour candles are heavily oversold. Yes, there are downside targets, but it's hard to drop with such an oversold condition. And we could head back here toward the $78,600 level, 78,700. We have the blue 300 period average passing through here, and some blue curve here, but it doesn't matter. Here's 78,600. But with this kind of oversold state, it's hard to drop down. Yeah, but it's unclear which way to open a position. Hourly is down, 4 and 12-hour are up, daily is down, weekly is overbought, but it seems to favor growth, so we need to wait again for a moment where there are no contradictions. And we have these contradictions right here and now. On the 1-hour and 4-hour, on the daily and 12-hour. So I'm inclined to think that we need to wait. If you yesterday, again, look, I give you information, right? In the private channel. You see all these charts, and you are free to make your own decisions. I'm just teaching you how to use this information. I explain my vision in as much detail as possible, how to interpret these tools. And so yesterday you could have taken along without my involvement, without waiting for $75,000. If you thought that was the right decision, because, well, every person has their own strategy, their own risks. They factor in their own greed and so on. I'm leaning towards growth for now, to the $80,000 to $84,000 range, but the hourly candles are concerning. Most likely there will be some unloading, maybe like after touching the 50-period average. I won't be entering the market. The daily and the hourly candles are concerning for buying. Well, that's the end of the review.